Hey guys, welcome to my channel. I'm Greg. I am going to do an update on the cryptocurrency market and let you know what I think is going on and why I'm looking for long trades, contrary to what the media, crypto Twitter, and other people are doing. But this is my Twitter page. I made an update video on VeChain, which VeChain is it's a pretty popular coin, and I do like it, but there's a lot of opportunities in here for a VeChain, in my opinion. Whether you want to play it off that low that I have on the chart, or this low or that low, but I think worst case scenario, you have a decent swing up here, or half the size of that wave to make some decent gains. Just FYI, just let you know, not financial advice. That's what I'm be looking at. I'm actually going to really look at VeChain as far as getting into that. But those of you who want to know coins that I'm looking at, Ethereum, obviously, Solana, Phantom, more aggressive plays would be like maybe a left zero, Lido DAO. I made a post. Lido's another one that was looking pretty decent, making pretty decent gains on that. So those are just as some examples. Like I said, not financial advice. To have a strategy in place right now is what I'm doing. And then obviously, if you are doing something like that, remember, you want to have a strategy if it does turn sour, if you will, and you can exit out of it. So, you're not riding a falling knife down. But I think the market is going to surprise some people, because I'm back over here on the Binance chart, the weekly Binance chart with the volume. Look at another volume spike in the volume selling on Binance. And to me, this is a bullish signal. So what is the signal that's going on here based on the volume? There's one thing that I think is going on. There's no buyers. Everybody, it's too uncertain. They don't know what's going on. They all expect this to keep just going down. So if you see this leg, the volume spike, and you see this leg, the volume spike, and I see this leg and a bigger volume spike, okay? But it's not going down. It's not going down as expected. The bears are expecting this to continue to go down. So it's at the bottom, guys, in my opinion. If it's not here, it's in a bottom forming process, in my opinion. You can take a look at the big picture over here. This is the 2020 crash with the volume spike. Here's the May crash with the volume spike. And these spikes are bigger than the 2020 crash. And that last one is bigger than the May crash over there. So you can see, just as an example, with these volume spikes, crash, what happens next, more or less. What could happen next, okay? So I look at that as a good signal. The other thing I look as a good signal is this, Cramer, this guy right here is notorious for making bad calls. And he's telling you to avoid all speculative investors like crypto as the Fed stays hawkish. And there's a guy on Twitter that does opposite what he says to do, and he's like up 200%. Just to give you an idea, I can't remember what his handle was on Twitter, but yeah, he's doing really good. He just does the opposite of what this guy does. It's like opposite of Cramer or something like that. It remains hawkish. But let me tell you something about this hawkish stuff right here, guys. Stays hawkish. For those that are new to my channel, we're going to go through and have a little bit of a history lesson. Okay, a little bit of a history lesson. You're new to my channel. I'm going to show you something, okay? Markets are 6 to 9 months. Some people say 1 year ahead. So right now, let's see. It is August. If you go September, October, November, December, January, February 2023, 6 months ahead. So you know what that means? Probably the September rate hikes. The November, December rate hikes probably already priced into the market. Think about it. That's how markets work. The markets are not the economy, guys. The markets are not the economy. Everybody meshes it all together. It's not. If you get into trading long enough and you look at trades on assets and how they go, you'll start realizing that over a period of time. It takes a long, long time to come to that realization. At least it did for me. When I was as example, in the 90s, playing around before the .com crash, I was doing the same thing off the media. What happened? Got wrecked. I got wrecked, guys. So you want to be careful of doing something what the media is saying. But right here is, what is this? Right in this area, November 2015. You know, it started right there in this area. Interest rate hikes. You can go check it out for yourself. Look what Bitcoin did. Bam, went all the way up. And you know what started right in that area? quantitative tightening, if you can believe it. And what did Bitcoin do? It still went up, and it did a correction, and it still went up. When did the Fed start lowering interest rates? In this area. And when did it do quantitative tightening? Right here. Boom. So everybody makes the assumption quantitative easing, and then bam, Bitcoin goes up. But over here, they conveniently forget about this over here, and everybody's going to go, well, that's a different time. You know, there's always an excuse. There's always an excuse over here. So let me take that off. Would it be unreasonable? You see this leg right here? You see that leg? Bitcoin went up, what, 350%? Okay. So would it be unreasonable think there's a probability that if I take that whole leg, and then Bitcoin can do another one right over there. Boom. You see that right up to there. 74, 75,000 would be unreasonable to think that and then do another crash? Oh, yeah, it could. It could. Think about it, guys. I mean, it's like in the history. It went up over here on it, went up over here and do another crash. So why is that important? What will Bitcoin do? Think about this. Elliott waves are really, really good for long-term planning. Third wave either there or here. This is fourth wave. And Bitcoin goes up, let's say, like that, right? So here's your waves like that. Now you got it out and you're seeing it's up here on Elliott waves. You're like, uh-oh. And you might even see a whole bunch of bearish divergence at the top. So what will happen? What will happen? Look at this. Just like that. Boom. And then boom, back down to there. And that's the third wave. That massive third wave everybody's looking for in the cryptoverse. They're like, oh, yeah, we want to make huge gains. And you will make huge gains. I mean, you make massive gains just like you did over here. But it won't be till when? 2024. Because what will Bitcoin do again? Check it out. Bam. Do all the way back down, 80% drop. Then it'll go up. And then probably quantitative easing and interest rates will be lowered by then. You know, and everything else that's going on. So after that one, that's what I'm looking at. That's what I would do. So up here at the top, you go short, ride that down. And now you're down here. What I'm doing, not financial advice, ride that up. And then you flip again, ride it down. Boom, just like that. I know that's easier said than done. But look, that's what you want to do. Plan that out a little bit. And don't go opposite. Go opposite of this guy. Just do opposite what he says. You're going to be better off. So I'll just leave it at that. Now, I'm going to want to go over the DXY real quick, and lots of discussion about the DXY. I see it showing up on a lot of YouTube channels, you know, and what they say is that, oh, you know, it's just keeps going up and up and up and up, and it will keep going up. But the facts remain is that the DXY is in a topping pattern. This is your typical topping pattern, okay? This is Bitcoin when it was at 66,000, guys. You go to Bitcoin when it was 66,000, you go back over that chart, you can see there's a massive amount of bearish divergence, just like this one right here on the DXY. DXY is getting ready to go down. Once this happens, this is going to be like pressure is going to be released for the markets. Pressure is going to be released for the markets, guys. So what will be able to go up? Bitcoin, gold, risk assets like tech stocks will have a lot better chance of going up, okay? So to me, it looks like the DXY is in a topping pattern. 110.4, 110.5 is what I'm looking for, and a potential fifth wave thrust to 112 or 114. I don't think it's going to make that, though. It's starting to get the candles are starting to become topping candles. So never know about this one right here, though, guys. So it actually looks pretty good. I wanted to go over the waves that Bitcoin is doing. I'm on a 30-minute chart. And then what I'm saying is that I wanted to go over the waves and let you guys know that, you know, I think that this is a consolidation area that Bitcoin is in. You know, it's very, very confusing, hard to understand. Are they corrective waves? Are they impulse waves, bullish waves? I mean, you can get either or out of there. Me personally, I think they are potentially, you have a good shot of these being bullish counts potentially. Then again, just never know. You know, I mean, this here, 1, 2, 3, 4, 5, there, you know, a 3-wave swing over here. It didn't break that low. That's good. It could be one here. Maybe that's a 5th wave thrust. Don't know yet. Got to wait for this to play itself out. But even if that is a 5-wave move, well, I mean, Bitcoin can come all the way back down there again and test that lows and fake everybody out and then start going back up again. And they could do this over and over again for almost months, guys. I'm not saying it's going to be months, but it definitely can do it easily for a month. because if you go over to the 2018 bear market, or coming out of the 2018-17 bear market, you can see a similar scenario where, you know, very, very much uncertainty in the market. It had a nice wave off the bottom right here, boom, and then correction, and still uncertainty in the market. When did the uncertainty go away in the market? Well, you can see right over here. Then it was off to the races, all the way up like that. That's where all the buyers started to come in, which goes back to this, where this spike in volume over here, uncertainty in the market. So more than likely, in my opinion, you can see it wander around in this area, and then eventually starts breaking above the 25,000, maybe even 27 or 28,000. When will that be? I have no idea. So in that area, and then it'll start pushing it up, because all the people thinking it's supposed to go to 10,000, or all the people that are short, or all the people that are not positioned correctly yet, are going to FOMO in those areas. They will FOMO in those areas. That's how the markets work, guys. Is the third waves. These third waves are people that are late to the party. You know, they just start taking off, like this wave here out, and then it just starts blasting off. That's how the markets work. Now, the canary in the coal mine are the S&P 500, the NASDAQ, you know, the Qs and things. Those are the canary in the coal mine. Taking a look at them, keeping my eye on them. I would not be surprised to see those assets, the asset class, instead of going up into a move impulsively like Bitcoin did here, that they might be dragging themselves up into a corrective wave or something like that. Excuse me, and going, you know, they're coming down in a corrective wave, and those assets class, they really like to do a massive B wave and then come back down into a crash again. And then that would coincide with Bitcoin, where Bitcoin could go up into its wave and then do its next crash coming up again. So that's kind of that's just my speculation on my part, guys, and wanted to present that information to you. So I'm not bearish yet until Bitcoin. First step for Bitcoin to go is it needs to break that 19,500, I think what it was, or 19,000 previous low. See that? Okay. Then we can start looking at more bearish. Want to keep that in the back of your mind. But ultimately, what Bitcoin needs to break to go bearish again is that 17,500. Coming back over here, you can see it's struggling to get back down there based off this volume and these indicators here on the volume, guys. It just is. You know, this is a bullish side. This is not a bearish signal, in my opinion. All right, if you made it all the way to the end, do me a huge favor, drop a like, hit the subscribe button. Peace.